Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar ended the New York session on Tuesday hardly unchanged as it flirts around the level of 69 cents. Since the rebound of 68.45, the market has attempted to try and take out the topside range, but still contained at 69.15 to 55, and at present is hugging at the 69-cent handle. Looking ahead, it is likely the market prices will remain slightly subdued until further update from the US and China trade sign-in. It is anticipated that President Trump and Chinese Vice Premier Li are scheduled to ink in the so-called Phase 1 agreement on Wednesday that calls for the US to ease some sanctions on China. As part of the Phase 1 deal, the US said it would scrap a new round of tariffs and cut in existing duties on $120 billion in products to 7.5%. However, Trump did say that 25% tariffs on $250 billion in Chinese products would stay in place. So from a technical point, we can see here that the market is still relatively negative and therefore, well, we're still expecting to see further downside tests. The target looks to 68.75 and waiting for the trigger to the bear case to be pulled at 68.45. I still view any move towards 69.55 as a potential supply zone. As you can see, the euro took another stab at the level of 111.45 overnight and was contained after the second time failed. It is assessed from the technical picture that the market should continue to its downside projection of 110.80 to 109.55 to 85, with any renewed advances from 111.45 and above should find a cap around 111.80 to 112.10. The dollar yen took a stab above the 110 handle, but thought twice about it. The market has backed down quite considerably, and at present still is a little bit apprehensive in taking the challenge back to the upside. I feel that from a technical point that we could still see a further bias to the downside, but we would need to see a break now of 109.60. If that occurs, then this should re-establish the downside trek towards 108.60 to 108.15. At present, the pound is still giving little away and still holds above the level of 129.1030 after the confirmation to the sell-off from the break viewed from 130.40. Now, if we do get a break beneath 129.10, I'm bearish and looking down towards the region of 128 to 126. Technically, still remains vulnerable to the downside. The gold took a stab to a low of 1,535 overnight before rebounding. It would seem that there was a report published that revealed an interim trade deal between the US and China does not remove tariffs on Chinese goods. The market bulls awoke on the news that the US tariffs on Chinese goods will remain in throughout the 2020 election, US election that is, even after both sides ink in the signed so-called Phase 1 agreement. Although the US has agreed to remove China from a list of currency manipulating countries as part of the deal. Now, from the technical point, we haven't fully broken out of the bearish bias. So although we did see a stab through 38, we could still see a challenge towards the downside, and therefore towards 38.42 may lead on towards a potential target of 1,522 to 1,500. Wrap it up with oil, when the market took a brief look at the $57 handle, but respected it. I still feel from a technical point the bulls are guarding this level, and I expect a rise or a rebound very, very soon. Back towards 58.65 or even higher towards $59 to $60 a barrel. Let's see if the market bulls can or get the initial momentum to take the market higher. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and enjoy the great start to this new day.